John, thanks so much for coming to us in the studio here at 731 Lex. What's your take on the increased regulatory scrutiny? This is something that I think a lot of people in the crypto community want to get done, but it's kind of painful right now.
Sure, when you go through anything that is uncertain, it is painful. But I think at the other end, it's going to be better when there is certainty, just like the markets. The real issue is making sure that there is a good framework and the different regulatory bodies in the U.S. can work together, and then therefore keeping the innovation, developers, and ultimately, we should have the capital markets here. I mean, Coinbase is only 10% of the whole trading volume. Why shouldn't we have more?
So you spent a lot of time on Wall Street prior to coming into crypto. Are these assets securities? Do you think the SEC, Gary Gensler, has a point with some of these assets?
Some of them, they're all different. There's utility, there's loyalty tokens, there's securities. Then there's actually just, fun digital collectibles called NFTs, which clearly no one knows exactly what to do with it. On your earlier segment, Gary Gensler says staking should be considered somewhat of a security, but it's a different construct. It's never existed in traditional finance. You're kind of putting labor to work, and you're putting collateral down to get yield. So it's a hybrid. So maybe it should be income for work that you contribute as opposed to a security.
Well, of course, the reason we're talking about staking is because Ethereum is now proof of stake. The merge has been completed as of last week. What is different for you now this week that that's over? How much realistically did it change?
Well, frankly, it doesn't affect any of the layer ones in the short term because the merge is about going from proof of work to proof of stake. The scalability issues are going to be addressed in 2023. And I think in the medium term, all layer ones should actually be rooting for more success. I mean, Kelly, you may be too young to know this, but like Matt and I, in our teenage years, we hung out at the mall. And that was your
I used to go to the mall.
The food court.
But there's always a tentpole store. That was Nordstrom's, right? And that brought in foot traffic. But next to Nordstrom's, there's also Foot Locker, there's the food court. And right now, Ethereum is, Nordstrom. So it'll be foolish for Ethereum not to want the food court so people can have more foot traffic and more experiences, and it'd be foolish for all the other layer ones to not want the foot traffic from Nordstrom. So in the medium term, I think it's good for everyone.
All right, an analogy that I do understand, but thank you very much. I want to turn to Avalanche specifically, though, because there was a whistleblower report last month making a number of accusations, basically that your company paid lawyers at Roche Friedman to hurt competitors, distract regulators, and pursue the personal vendettas of your founder and CEO, who I should note he himself has called the allegations conspiracy theory nonsense. What is your response to them, and is any part of them, given there are multiple parts in these parts of these accusations, is any part of them true?
No, absolutely false. In fact, the other party has already come out and admitted that it was false. But what was really good about that whole experience was the Avalanche community. The instant that came out, the community recognized how false it was, and the support that we got at Avalanche from the Avalanche community was just incredible. It really actually made, ultimately, Avalanche even stronger.
What differentiates Avalanche from the 20,000 other cryptocurrencies out there?
Well, I'll highlight a few things, but there's many things. I mean, first of all, the instant finality, because the protocol itself, it's a different type of protocol. So settlement and payment is the same time. The architecture, we have the concept of sub-network, which is basically a layer one on top of Avalanche, using the security of Avalanche. That allows you to do so many things. It basically provides developers easy execution environment where they can create their own necessities and be composable for their own applications they want to create. So those are the two things. And then most importantly, I think, is that this subnet construct allows regulatory compliance from places like KKR. So I think one of the big announcements we had last week was with Securities and KKR. This is the first time. I mean, this is very exciting to me because I came from traditional finance. When real-world assets can get put on the blockchain, the permissionless blockchain, you're really a watershed moment because so many assets today are private and illiquid, and individuals don't have access to that. Now, KKR is the first large asset management allowing a sliver of a very well-known fund to be tokenized. This basically is the first step to the future of finance where all three of us you eventually will be able to buy private securities, private funds, as easily as you and I buy Apple stock.
Well, and what else will we be able to do? What other applications? You know, Eric Adams has talked about putting your driver's license on the blockchain, or the deed to your house, your birth certificate. And we've had a number of people talking about, you know, other real assets or even CBDCs that could go on certain blockchains. Would Avalanche be the right fit for that?
Absolutely. This is actually all happening. I mean, not just in Avalanche, but around the whole ecosystem. Real-world assets like loyalty points at Starbucks. You've got the PGA. You've got also the football clubs in Europe, or the soccer clubs in Europe, all doing engagement fan tokens. Ticketmaster converting their tickets from QR codes at some point to NFTs, which is a more secure way. So all of these quote-unquote real-world assets are coming to the blockchain, leveraging the benefits of, you know, operationally cost-effectiveness as well as better distribution ultimately.
All right, let's end by talking about real-world problems that is pretty much universal right now, one of them being inflation and the Federal Reserve fighting to respond to it and bring it down in the form of tighter monetary policy. That has weighed heavily on the entire crypto ecosystem, no doubt about it, but I've noticed that there's actually been some recent underperformance of Avalanche specifically, and I'm wondering what ultimately you attribute that to.
Well, I think it's a higher beta. If you look at the other layer ones, it's higher beta than Ethereum and Bitcoin. And very recently, since the merge, Ethereum's actually underperformed, you know, Bitcoin. In the end, all assets, whether they be crypto assets or Snowflake, you know, SaaS companies, they're all, the prices move because of three things: the macro, the liquidity, and the underlying fundamentals of the assets. In the case of Avalanche and other crypto layer ones, the adoption of the network is the fundamentals, and that is absolutely improving. So for your viewers and your investors, there's a lot of alpha to be generated because underneath the hood, there's a lot of dispersion.